but we're also now looking at the accumulation side via the treasury. And so that is where my focus is today.
And so, Matt, if we're thinking about the treasury and mining aspect of the business, when Bitcoin miners are physical derivatives of Bitcoin and Bitcoin's price, right? They're extracting so much Bitcoin from the network. One thing that we know from being in this space is that as Bitcoin price increases and in a rapid succession in these bull markets, the machines can actually increase in value. But then vice versa, when Bitcoin price is really low, the machines are going to be potentially much lower and have a discounted value. When are you deciding to go Bitcoin miners versus just buying Bitcoin directly, knowing that if the price is high, you're going to be buying machines overpriced, but if the price is low, it's better to maybe just to buy the Bitcoin at that time because you're going to get more of it than the miner could have ever gotten, even though the machines are, let's say, underpriced.
I understand. American Bitcoin is positioned in such a way as to take advantage of the countercyclical nature of Bitcoin. We've been in this industry now for a while. We've seen the booms, we've seen the busts, and we are still here. And that's because we have a fairly disciplined approach to risk, right? And to capital investment. And so if you look at past cycles, there is a euphoria. I think we were all long-term believers in Bitcoin. We all believe that Bitcoin is on a steady ascent to a much higher value. I'd say, again, gold is at 21 trillion. Bitcoin is around roughly 2. There's a lot of headroom, even on just gold, and I think Bitcoin has more to offer the world than gold does. There's a lot of headroom for Bitcoin as an asset. That being said, it is quite likely Bitcoin takes the scenic route to get there, right? So there will be times where Bitcoin goes up, there will be times where Bitcoin goes down. And if you're over-levered, as you put it, in any given direction, that could very negatively impact your operations. So as American Bitcoin thinks about how to grow or stack or grow our fleet responsibly, we are very attentive to not overpaying for things. If you've seen the past few quarters, there have been other folks in the mining industry that have chased headline growth, that have chased a very high exahash number and declare themselves the champion. And you know what? I'm okay with folks being the biggest number. I don't have to be the biggest number. I just need to be the best miner. We need to be the miner that, from our perspective, is producing Bitcoin with the best structural advantage that you can have in the industry, and then use that to help accumulate. It's one of our two wheels. We have the accumulation through the mining, we have the accumulation through the treasury. But on the mining side, you can't get ahead by overpaying. You can get a sugar rush from a headline, from a massive fleet expansion. But to win long-term, you really have to be thoughtful about the ups and the downs of the cycle. So to give one example, for a long period of time, we were getting pitched heavily on flipping from a forced air cooling or fan model of mining into liquid cooling. I think that liquid cooling in various forms, there's immersion, there's water cooled, there's direct to chip. There is a tremendous amount of opportunity, but it had to be at the right time. And so as we sat around and we decided what would make sense for us and when would it make sense for us to make the jump from the forced air cooling towards liquid, we waited. And the American Bitcoin, or at the time Hut 8 and US Bitcoin, we were under a lot of pressure to put out a release to say that we were going to be a liquid cooled company and we were doing this. But at the end of the day, I've always been of the opinion that the early bird gets the worm, but the second mouse gets the cheese. And so we were really trying to make sure that when it came time to do that purchase, that everything was ready to go, that we would get what we were paying for, that we were not anyone's guinea pig, and we would grow the business accordingly.
I love that because you're seeing these immersion and hydro miners cost a lot more and don't have as good capital paybacks as, let's say, the air-cooled devices. So what is the relationship with ABTC and Hut 8 in terms of hosting costs, if it's public, operational SLAs you're holding them to, scalability, like do you have a first right of refusal on the space that Hut 8 is building out? Can you talk a little bit more in detail about that relationship?
Yes. Hut 8's advantage for American Bitcoin cannot be understated. So the ABTC partnership with HUD gives us benefits of a few kinds, right? There's the back office benefits, corporate benefits, shared resources on a team level. There's an energy pipeline benefit. And then in the middle, there's operational benefits, right? Once you've got a site up and running, keeping it going at maximal efficiency. The way that has been structured is somewhat of a sibling company relationship. Right now, Hut 8 owns a majority of the shares in American Bitcoin. We are freely trading. We have shares out in the market. Folks can take part in the American Bitcoin story directly. They don't need to go through Hut. They can buy shares in American Bitcoin directly through the brokerage. But we have a tightly integrated relationship with that company. And what that means from a cost perspective is that we are working with them in a structure that gives them somewhat of a managed services agreement for the energy. They're given a small fraction of sort of the overall revenue as a fee for running the site. Now they're incentivized as a partner organization. They're incentivized to charge us a fair amount of money. We've not disclosed the specific figures. Of course, we're public, so you'll see more details around the nature of that relationship as we go through our disclosure processes. But that relationship is fair, but is value creating. What I mean by that is that for Hut 8, American Bitcoin is the best partner you can have. We are a customer of first resort, right? If you had a site and they're an energy infrastructure expert, if they have a site at Hut 8 that could be ultimately used for AI, maybe not today, but maybe longer term, it increased things the site would need to get there, fiber redundancy, power redundancy. It just doesn't have the fit and finish for hyperscaler, but it's got a great energy opportunity. American Bitcoin is first in line, right, for that sort of opportunity. We are we obviously come from the company, come from the sector. We are working hand in hand with the team at Hut 8 to develop opportunities that could be to the maximal benefit of American Bitcoin and have that benefit ultimately flow through to the Hut 8 organization as well. So again, I would basically split the relationship into three components. There's a development relationship, and Hut 8 has a pipeline in the gigawatts, so there's plenty to develop together. There is a operational relationship. So Hut 8 making sure that these machines, which are liquid cooled, are well maintained and processing at full speed, and are really getting that efficiency advantage that puts us ahead of our peers in the Bitcoin mining category. And then finally, there's a shared services agreement for corporate services. And this is a way for us to keep the headcount very low at American Bitcoin, which means that for our treasury operations, you don't have a cast of thousands stapled to a Bitcoin treasury, right? You've got mostly Satoshis in there, and then a few staff like myself making sure that the trains run on time.
And so, Matt, I guess digging into it, do you see yourself having most favored nation status with Hut 8 as the CEO of American Bitcoin? Or do you think that you'll be treated like any of their other large customers?
I think it is a special relationship. It is a special relationship that's been codified in contracts. We've got a great governance setup where there are two independent boards, right? So there is an independent board at Hut 8 that is looking at a lot of these big deals from the Hut 8 side. There's an independent board, or there's a board with several fairly senior independent directors at the American Bitcoin side that is assessing the same deals. So you've got two sets of board, you've got management, and then you've got a deal. And so as we think about ways to work together, this is a situation where, of course, we've got the paper in place, we can grow and we can scale, and we will. There are so many folks looking at these contracts that I would really want to stress that these are deals that are to the advantage for both companies, right? American Bitcoin's goal is to build the Bitcoin infrastructure backbone in the United States. Hut 8 is a brilliant infrastructure partner to do that, and we can work together.
Yeah, and I think they're a great partner to scale, and we've seen them grow. So let's jump into actually getting the deal done. So you guys have this idea of creating American Bitcoin. How do you identify Griffin Mining as a company to merge with? How are negotiations with their board? And how does it come out where you guys have the deal that you actually get, which is where they own a very small percentage of Griffin and you guys own a larger group? And then kind of what's happened to the assets, the S19s that Griffin owned previously and were hosted? And do you have plans to retire those, or have they already been retired? Can you talk more about those details and just trying to show the audience what goes into putting together one of these large transactions, and how do you go from private idea to public company in such a short order?
American Bitcoin has always been geared towards giving the public markets an accessible way and a trustworthy way to gain exposure to the Bitcoin ecosystem, right? On the path to a public listing, there were a few key steps that needed to take place. First was the launch of the American Bitcoin vehicle. So this meant pulling it out of Hut 8 as a separate company. Right? So we started with about 10 exahash of Hut 8 machines that were put into the American Bitcoin vehicle. We combined that with the management team. We combined that with Eric Trump as chief strategy officer. We created this NewCo that would serve as the way to get the public more invested in the American Bitcoin story. Second to that, we needed to find the proper partner to go into the public markets. Right. So if we wanted to be publicly accessible, we needed to work with a company that we could get a deal done that would be beneficial to our shareholders, that would make sense for their team, that would be ideally NASDAQ listed, public markets listed, that would give retail and institutional investors confidence in the final company. And as you think about Griffin, which was ultimately our target, there's also a nice synergy because this was a team that knew mining. Right? We've seen in the space a lot of mergers between asset companies and whatever girls left at the ball, right, to try and get things going for a Bitcoin treasury company. This is slightly different from our approach, right? We were working with a team that knew mining inside and out, that had a good sense of the Bitcoin accumulation. And so we were able to come to terms on a deal fairly rapidly, right? So from the day we launched, which was April 1st, 2025, to the day we listed, formally closed the deal, et cetera, which was September 3rd, about 5 months, 2 days, Griffin presented a terrific counterparty to get that deal done.